Good morning, traders, and welcome to the Bookmap channel. My name is Charles. I run a community called Piratetraders. We are focused on the ES, the NQ, and how they move through the two-way auction process. What do I mean by the two-way auction process? I mean, who's in charge? Is it the buyers? Are they trying to take the market higher? Is it the sellers? Are they trying to take the market lower? Or is there two-sided trade? Is there chop? Is there grind? Is there tug of war? So let's dive right into it this morning. I am looking at the ES over here on the left side of the screen. What you see is a market profile chart. The market profile is very, very similar to candlesticks. It just displays the information in 3 dimensions so that you can see the specific levels where the market spends the most time. We also have on this chart the volume profile, which are the little volume nodes that you see in here. We'll talk about those throughout the day and how we use them. And then over here on the right side of the screen, we have the Bookmap chart. The Bookmap is an order flow chart. I use that to see where the liquidity is sitting in the order books and what happens as the price moves. How does that liquidity change? As a matter of fact, here's an example right here. There was this large node of liquidity sitting at 51.77. The market was working its way up to test that liquidity. As soon as it got there, that liquidity disappeared, and now the market has started to reverse right back the other way. So those were not real orders that wanted to get filled. That was the market trying to create a magnet to pull price to it. Once that magnet disappeared, there was no reason for the market to continue higher, so it pulled back a little bit. Okay, so we'll talk about Bookmap, we'll talk about the market profile, and we will also talk about what we call market internals. This is just a sort of under the hood look at the market that we will be discussing later on. All right, so what I'm going to do today is I'm going to start off giving you sort of what are the things that could happen, what are the scenarios that could play out this morning and throughout the day today. And then I'm going to step back and use that to create a context for what could happen throughout this week. Okay, we are sitting at what I think is a very important precipice where the market is in a place where it could continue much higher, it could break much lower, or it could go nowhere for a few days. So I've got to take this just one step at a time and kind of walk you through what you'd want to look for to understand which of those scenarios is playing out. So again, we're looking at the S&P 500 here. These are the futures contracts. So over the weekend, the market pushed higher than Friday's range. So that means when we open this morning, we are going to be opening with a gap up. The way we measure gaps is from the opening price to the previous day's high or low. So this one being a gap up, we're going to be measuring that gap from wherever the market opens. Obviously, we got 30 minutes till the market opens, so there may not be a gap by the time the market opens. But if there is, the target will be for the market to try to fill that gap. And the filling of that gap is getting to the previous day's high, getting to Friday's high. Okay. That high right now is 51.67. So if the market opens with a gap up, the first order of business is for the market to try to fill that gap, to try to get to 67. Now, if it cannot, if the market instantly brings in buyers, if it starts to try to fill that gap and it cannot and it continues higher, that is bullish to see. There are no ifs, ands, or buts about it. If it gets a gap and go this morning, where it doesn't even fill the gap, that is bullish, and we are expecting the market to continue higher, maybe even all day long. Okay, we got to just monitor for continuation and see how far they can push it, but a gap and go would be very bullish. If we were to get a gap and go, the levels that I'd be watching to the upside, the first would be, I would expect with almost certainty, the market would test a level 51.85. That is a weak reference in need of repair. Now, it might be that's all the market needs. So it might run out of steam there and then pull back down and fill the gap. If not, if it is able to get above 51.85 and bring in new buyers and get support up there above that level, well, then I would assume it is heading to test the base of the single prints down at 52.01. Okay, so again, gap and go takes us to 85. Support above 85 takes us to 52.01. Now, that will likely act as resistance. So that might be all the market is able to do today, is just get up there, tag that, and then it runs out of steam and comes back down. If it is able to get through that level, the next target to the upside is repairing the week reference at 52.13. I don't think the market would go much further than that, but if it is, the next target is 52.19. Okay, so I would say if we get a gap and go, we should almost certainly be able to get to 51.85. If we get new buying, we should be able to test 52.01. And if we can get new buying there, we'll look to test 52.13. Okay. Now, let's say instead the market opens and it fills the gap. It comes down and it gets to yesterday's high. Well, then we would be looking for support, not to a tick exactly at yesterday's high. It never bounces exactly, but just looking for support right around yesterday's high. So somewhere above, we'll call it like 63. We'll be looking for the market to pull down, fill that gap, and then the buyers step in. If we fill the gap and we do not spend a lot of time inside yesterday's range, we don't spend a lot of time below 67, we don't bring in a lot of volume below 67, well, then that is also a gap and go, which increases the odds of heading up to test 85. Okay? Same thing as if we didn't fill the gap. Now, what if the market fills the gap, but then it starts to spend time and bring in volume inside yesterday's range, right? It doesn't get support up there. It can't keep going. Well, then we would be looking at this as what we call a look above and fail of the previous day's range. A look above and fail of the previous day's range increases the odds that the market needs a larger pullback in order to bring in buyers. Where would that pullback likely take us? Well, the first would be to test the overnight low, which is coincidentally right here next to this week reference. So the first move to the downside would be 51.53. And again, same thing as we were talking about with 85. If they poke below 53 and then they turn around and start heading right back up, well, then that's all they needed to do. They just needed to repair that week reference. If not, they're looking to repair the next week reference at 51.45. So if we repair 53 and we get new selling, we look to test 45. Same thing there. That might be all the market needs to reverse and come back up. If not, we look to test the lows from yesterday, from Friday, around 51.28. Same thing there. Perhaps they just poke below and then turn around and come back up. But if not, things get very, very bearish because there is a gap. Now I'm going to zoom out. So that's intraday. What do I think is going to happen? Gap and go, test 85, test 52.01, test 52.13. Okay? If we don't get a gap and go, test 53. If that's not enough to reverse, test 45. If that's not enough to reverse, test 28. That's my intraday today, sort of viewpoint of how I'm going to look at the market. But now what effect could whatever happens today have on the market over a longer time frame, right? Over the next few days, over the next few weeks. Well, the move that we made to the upside last week was what we call excess. It was a very extreme move. The market moved very quickly with a lot of volatility, and it did not give stronger hand buyers a chance to get in. Essentially, buyers were chasing price to the upside. A lot of the momentum right from the low, right from 52.38, a lot of that momentum was just shorts covering. It was people that had previously gotten short, getting out of those trades that created that momentum. And it was at the end of the day on Friday and in the overnight this weekend, it was FOMO buying. It was chasing the momentum to the upside that got us that move up. Now, here's the thing about short covering followed by FOMO buying. And now again, we're talking about it on a daily time frame, from one day to the next to the next. It can go on for a shockingly long amount of time. It will shock you how far they can push the market when they have that momentum. So if we get a gap and go this morning and the market starts to push higher, I'm not going to question it at all. I'm going to just trust that momentum, trust they can keep pushing it, maybe for days to come. But if the market dips back down into this gap that we left behind from Thursday's high to Friday's low, So if today the market pulls all the way back down to Friday's low and we don't flip in reverse there, that to me is very, very bearish on a longer time frame, that the market got itself overextended and it needs to pull back with price. If that is the case, I'd be looking to come back down and test the area around the 50-40s, 50-50s. Okay. So let's zoom out real quick. We'll take a look at the monthly chart, the weekly chart, and the daily chart to give us more context moving forward. So first and foremost, on the monthly chart, we are no longer one time framing higher. So that tells us we are in balance. The market is balancing off. Again, this is on a much longer time frame, right? This is over essentially like almost a half a year or so. The momentum to the upside on the monthly time frame has come to an end because we made a lower high. And now we are either, actually, let me zoom in a bit. Okay. We are either going to go sideways at higher prices until the market is ready to continue higher, or we need a pullback with price. So on a monthly time frame, we still have not established which of these two is happening, right? This month could easily poke down and make it lower low on the monthly time frame, and we could continue lower. So all we know on a monthly time frame is that we are in balance. We do not know yet whether it is a balance with time or price. Let's zoom in and take a look at the weekly. So we can see on the weekly, it appears this was balance in here on the weekly time frame using time. Okay. So it was excess, balance, excess, balance, excess, that then instead of balancing using time on a weekly time frame, it pulled back with price. It used price and it pulled back into this previous balance area. Well, now it would appear that that momentum to the downside on the weekly is over. And so that actually increases the odds that the market is going to turn around and head back up towards all-time highs. What would change my mind? Well, if we get back down into yesterday's range, we pull all the way back down below yesterday's low, and then I know we need to fill the gap, well, that would change the way this chart looks. Okay? So right now, the monthly is uncertain. The weekly is more bullish. Let's zoom in and take a look at the daily. Okay, so the daily chart is where we start to get some more information and a better understanding of what's going on. There are two trend lines that I have marked on the chart. I know it's a little messy because I put the extension on it so that it just extends forever. But essentially, you've got a trend line down on the daily time frame from the highs, and you've got a trend line up on the daily time frame from the lows. Okay? If the market today either just stays up here right on top of that trend line. So let's say we kind of just have a sideways day that kind of dips into yesterday's range a little bit, pulls above, and it just kind of bounces around and goes sideways. That to me would be neutral on a daily time frame. It wouldn't really tell me, are we going to break higher or are we going to pull back with price, right? However, if we get a continuation of the momentum today and the market closes above this trend line, like if it were to close right where it is right now, at the end of the day today, that would be bullish to me for continuation to the upside because we have broken through the resistance above. However, if the market pulls back down today, if it gets back down into yesterday's range, it heads down to repair those weak references. It maybe even gets into that gap and it closes back down below this trend line. Okay, at the end of the day today, well, that would tell me we are likely pulling back with price and we're going to get a larger pullback on the daily time frame. Okay, and my reason is just because of the amount of excess created over the last few days of last week. You can see the move that the market made in just 2 days, which again was short covering. It was not new buying. It was people that were previously short getting out of their shorts that caused the market to go up. Okay. You can see that it made as big a move to the upside in 2 days as it took the market like 5 days to make a move to the downside. Okay. That's not the way markets normally work. It's normally stairs up and an elevator down. In this case, we've got elevator down and then, stairs down and then elevator right back up. So I am very cautious being a bull today because there is a lot of weakness that we left behind in here. And I do not believe we've given those stronger hand buyers a chance. Okay. If we can keep the momentum going, I'm happy to join the party. I'm happy to be a bull. I'm happy to assume we could head all the way back up to the all-time highs. But before I can feel confident about that, I want to see us close above this trend line on the day time frame to give me that certainty, that confidence. Okay? So how would I describe myself this morning? Am I more bullish? Am I more bearish? Am I more neutral? I would say as of right now, I'm completely neutral. I'm a little more bullish because we have a gap up. A gap up is a sign of momentum. It's a sign the market wants to keep going up. So I'm a little bullish purely because there's a gap up. We also have a trend up on the daily time frame. We have 2 days in a row, one day. This will be the second day when the market opens, where we have higher highs, higher lows, and value higher. Okay, so that is absolutely a recipe for the market to continue to the upside. But I'm just very cautious with that. So if we get a gap and go, I'll join the party. If we close at a higher price, I'll stay bullish come tomorrow. But I am just carrying a lot of caution because if the market pulls back into yesterday's range and starts spending some time, it can come back for these weak references. If that's not enough to reverse the market and basically spend the day going sideways, then we need to come back for this weak reference. If we come back for this weak reference, we are back in a gap. And that significantly increases the odds that the market's going to pull back to 5101. And if the market pulls back to 5101, any FOMO buyers that have been chasing this market to the upside are going to get squeezed. And before you know it, we're back down at the lows. Okay? So I'm slightly bullish, but I am very cautious, certainly on a swing basis. Any questions from the chat? I'm talking about some questions from the chat. Any questions at all? We got 100 awesome individuals hanging out. We've only got 30 likes. Please hit that thumbs up button for the Bookmap. They were nice enough to put this stream together for you. Give them a little thumbs up to say thanks. Good morning to DNK. Will is in the house. Jeff is here. He says he can't trade, but we'll see what we can do about that. Jay in the house. Lots to do. The casino is open. Good morning, all. Debbie B is here. Jads, Bill, Nap, Christopher. Magnet equals order spoofing. Yes, sir. So a lot of times in the order book, what you will see on Bookmap, they do something called spoofing, which is that they put large nodes of liquidity in the order book purely to bring price to it or to scare price away from it. And I know that's a little tricky. You're like, well, wait a minute. So you're saying sometimes liquidity nodes pull the price to it. Sometimes the liquidity nodes push the price away from it. What the heck? Well, it all kind of has to do with what direction the market is going. So if the market is heading to the upside and they start piling in liquidity above, they are likely trying to scare the market away. They're trying to scare it back down. If the market is heading down and they start piling in liquidity above, they're trying to pull the market back up to it. So you could use this node, this little tiny node that's just starting to form here at 73 as an example. The market was moving towards it. They started to pile it on there and then it pushed away. Okay. But yes, generally the reason they spoof is just to get price to go where they want it to go. And then the second it gets there, those orders disappear. Sons of a guns. Good morning to Malang. Mr. Ree is in the house. Good morning. Good morning. RP is here. RP says, thanks for raining on my parade. I thought we were headed to the moon today. I'm not saying the moon is impossible, my friend. We have a gap up. We can totally get a gap and go. I'm just saying there is a lot of weakness below the market. And so we would need it to be more FOMO. We would need it to be more short covering, more people chasing longs. And that can last. I mean, it can last sometimes for weeks. But we just don't know for sure until we see it. Griff says, do these large moves down that you are talking about usually come from look above and fails? Yes. Generally speaking, and you can use the low from Thursday as an example of this. Generally speaking, if the market wants to do a very violent move one direction or another, it will first look below a level or above a level and fail. So Thursday was a great example of that. All the momentum was to the downside. Okay? The market opened. Let me actually zoom in. Yeah. The market opened all the way up here. So momentum on a longer time frame is down. Everything looks bearish. Everything feels bearish. It's the end of the world. It's the end of the world for all traders. So the market works its way straight down in the morning to get below these previous lows. Okay? The second they get below there, the second they give confirmation to the whole world that this thing is going to continue going lower, what do? Turn right back around. Well, by turning right back around, what happened? Oh, shit. All these people that are shorting, all these people that were shorting the previous day, all those people that were shorting the next previous day, right? They all are like, oh no, I'm wrong. And they all get squeezed at the same time. It's that squeezing effect, that forcing sellers into buyers, right? This is what we're so obsessed with, this auction process. The minute that the sellers knew that they'd missed their chance to take profits at the low, they all got out and we instantly make a violent move right back to the upside. So yes, generally speaking, if you're going to get that sort of slingshot effect, it's going to be from getting everyone short and then reversing, or getting everyone long, for example, this morning, and then reversing right back down. I mean, just imagine if this morning the market were to open and it were to spend some time dancing around and then it were to get above the overnight high, everyone would be like, oh my God, I have to get long. It's going to the moon. I'm going to miss it. And then what if it comes back down into yesterday's range? Well, a lot of those people are going to change their minds. Well, what if it gets below 45? Well, a lot more of these people are going to change their minds. And before you know it, that slingshot heads to the downside. What we always talk about is balance leads to excess. Excess leads to balance. So this is excess. Make no mistake. From Thursday's low to the open right now, that is excess. Now, the excess might not be over. We might still have momentum and we're going to keep going. But the second that it's over, we need balance. Good morning to Michael. Bernie in the house. Christopher is here. Tom Gunn. Arnold, welcome. Ships is here. Hola to you. All right, guys. Well, we got 6 minutes until the market opens. So if you have any questions for me, hit me up in the chat. Also, hit the thumbs up button, y'all. It's not going to hurt, I promise. No pain will be felt. Ken says, Q, please. Great. Let's look at the Q. Okay, let's actually start zoomed out. And we'll take a look at the daily for the NQ. Okay. Okay, so when I'm looking at the daily for the NQ, it's very similar to the ES. It looks like you got a little tiny gap up this morning. So if they can keep the momentum going, If they can get a gap and go or spend very little time and bring in very little volume inside of yesterday's range, they can keep the momentum going. However, I would say I'm a little more bullish on the NQ than I am the ES. And the reason is because this area right here is a giant balance area. I mean, I'm talking multi-month long balance right there. Okay, we'll call that between like 18,100 and 18,700. Okay, that is a lot of balance. They broke out of that balance and they went lower. If they can re-enter that balance area, there's no reason they can't immediately move to the opposite end. They shouldn't have to go sideways in here much more. Okay, so if this morning the NQ can get momentum and keep it going, I would be very comfortable assuming that could last for the next few days. Okay. Also, the lows in here seem a lot stronger to me than the ES. Okay. So it just seems like stronger hand buyers did have a better chance. Now, they still had that same slingshot effect, and I'm willing to bet there's still a lot of weakness in here, but I'm a little more comfortable being bullish on the Q. Simply looking at the daily. So let's take a look at the market profile chart for some specific levels. So generally when I'm looking at the NQ on the market profile chart, the main focus that I use are large nodes on the cumulative profile because it does tend to dance between them. Get to a large node, bounce around for a while, move to the next one. Get to a large node, bounce around for a while, move to the next one. Okay. So you could see on the way down, we had this large node right here at 18,304. And then we had this large node down here at 18,018, and it just went straight down there. Okay. Couldn't reverse, couldn't come back up. Where was the next large node? 17,712. Okay. Straight down to it. So it tends to move very quickly from one large node to a next. So that's the first thing I'm aware of this morning. We did leave behind a very, very large gap on Thursday. So same thing that I said with the ES, where I said, if the market gets down below Friday's low, so for the NQ, that's going to be somewhere below 17.8, we'll call it 95. Okay. If it gets below there, there's a very good chance it's going to head back down to fill the gap. That is also moving from one large node straight to the next. Okay. So if they want to keep this momentum going on the NQ, in my humble opinion, they have to hold 17,930 today. I mean, they have got to stay above it because the more time they spend below there, the more likely they're going to get that larger pullback. Okay. If they can hold this node right here at 17,930, they can either go sideways inside yesterday's range or keep the momentum going higher. So what would I be watching for at the market open? Well, first things first, you have a little tiny gap, so there's a very high probability they will fill the gap. So the first question you're asking yourself is, what happens at Friday's highs? Okay? You could even call it as low as 18,030, right? So they come back down. Do they find support above 30? If they do, it's a gap and go. It's bullish. Let's join the party, right? If they start to pull below there, well, then it's neutral. It's uncertain. And I would look for sideways chop basically inside the overnight range throughout most of the day. If they get below the overnight low at 17, we'll call it 17,985. If they get below there, then you're looking for a further pullback. That is intraday today. But again, to me, this has positioning to keep going higher if they can turn this area into support. Okay. They are opening at the high, which makes me cautious. That tells me they may want to pull back and try to fill the gap, as they are getting FOMO buying before the opening bell even rings. And boy, can those weak hands get squeezed. All right, the market is open. So first order of business for the market, I'm looking at the ES once again. The first order of business is to try to fill the gap to 51.67. We will be looking to see, do they find support somewhere inside that gap without filling it? They also left behind a weak high, which means at some point today they're coming back for that high. So that is actually bullish to see. But first they must try to fill the gap. So I'm looking at this little node right here around 51.72 from the overnight range. That is of interest to me because there was a little bit of volume that traded in there and we spent a little bit of time in there. A lot of times if the market wants to get a gap and go without filling the gap, it will first fill half the gap, and that's about halfway. So that to me is the first sort of potential support level, 51.72. No idea if there'll be buyers, but let's wait and see. Going to zoom out here a little bit on the Bookmap. So we do still have, man, this node of liquidity has been here for a long time, down here around 49.60. That is very interesting to me that that's still there. Well, why do you care, Charles? Why do you care if there's a giant node of liquidity just randomly sitting at some spot in the order books? Well, the day trading bots that we've become so used to seeing operate in this market, one of the main mechanisms that they use to make decisions about, what trades they're going to take and how long they're going to stay in it is they measure the liquidity in the order books above and below price. So as long as there's that one random massive node of liquidity sitting somewhere, it kind of messes up those day trading bots and it makes them less active. So that is interesting to see. There's no specific takes away in terms of price, but I feel like we ain't going to all-time highs as long as that's still there. I'll put it to you that way. Good morning to Willie T. Scooball in the house. Percy is here. Once again, and as always, let me know if you have any questions in the YouTube chat. Cool Bean says, what did you have for breakfast? I haven't. I don't usually have breakfast till about 11. I'm just drinking coffee. But thank you for your interest. No, I don't intermittent fast. I'm just not I'm not a breakfast person. Okay. So as the market pushes back through the opening price, generally speaking, I should be bullish, right? Because that should be a sign of a gap and go, as we discussed earlier. However, I feel cautious for several reasons. First and foremost, we left behind a weak high. So it might just be that they just want to poke above that high and then come back down. So I can't get bullish purely on the pass through the opening price because of that. We also have a low volume low at the low of the day today so far. So that is almost like a weak reference, increasing the odds the market will come back. We also did not get that half gap fill. We didn't even get halfway to filling the gap. Not quite. So all of those things tell me that the probability is actually more of a look above and fail of the overnight high than necessarily new buying. So I think we're in for some gap and chop this morning. Gap and chop, where they gap and then they chop. Ship says, I hit the like button. I think the rest of you should be looking in the mirror. You should be saying to yourself, you should say, self, why won't I hit that like button? Doesn't cost me a thing. I just refuse to do it. I want Charles to feel like nobody cares about him. Tony says, you eat charts for breakfast? Yeah, I have an addiction to eating charts. Charts and chocolate. Sorry, I don't know how to say this name. Lacopo says it's a few days that there was 2,500 contracts at 49.60. Does it mean something to you? Yeah, like I said, I don't think they actually want to fill anything at that level. I think they just want to fuck with the day trading bots, the bots that use liquidity to enter orders, which just less day trading bots, less liquidity overall in the order books, easier it is to push price around, the easier it is to be volatile. Okay, so we are back through the opening price. We've repaired that weak high. So now to me, it is the buyers are taking control, but they have got to hold this overnight high. They've got to hold 79. Okay? If they pull back through the opening price again, they're looking for that gap fill. If they hold here, if they can hold the support, they're looking to head up and test 51.85. Can they hold it? For the regulars that are in the chat, for the people that have been hanging out for a bit, what are you guys noticing about this buying up here above the overnight high? What's catching your attention about it? Armando, tempo is dying. Cool Beans, no follow through. Ken, lack of tempo. Close. What's the other thing we were thinking might happen up here? It's more short covering is what we're looking for. Those volume dots on the chart here show us these are stops getting taken out. So now they got to hold this level to bring in those new buyers, but they haven't done it yet. David says low volume. No, the volume's okay. Volume's okay. Volume and tempo are okay right now. But it's a matter of seeing that it's these large orders getting stopped out, not new buyers. Okay, so here's the opportunity for those new buyers. Can they step in? Can they keep the market above that overnight high, above 51.80? Or does it pull back down through the opening price? Okay, that's the new buying. That is bullish to see. So that increases the odds in my mind. We're heading up to test 51.85, but they've got to stay above the opening price. From here on out, as long as the buyers can remain in control, they can keep pushing the market higher. But the way they will lose control is if they pass back through 51.78. That will be a sign they need to fill the gap. So we're looking to head up and test the first week reference above. Once that's repaired, can they stay above the opening price or do they pull back through? If not, we start to look to head higher. And so you say to me, you say, Charles, how could you know that? How could you know that we're going to go higher? Because there was only two things that could happen once we got above the overnight high. We were either going to get above there, run out of steam and pull back down, or we were going to bring in new buyers and keep going higher. So that's what I was waiting to see. Which of those two happened? Once we brought in the buyers, I assume they have the momentum. And it will only be when the market tells me that momentum is out, passing back through the opening price, that I will change my bias. But Charles, isn't it mostly short covering and FOMO buying? Yes, it is. But that's the thing about momentum. It will shock you how far they can push it. Edmund says, how can you distinguish the difference between new buyers versus stops getting taken out? I wish there was like a simple thing. It's just, I know. It's like, I just know the levels where the market does business, where you're going to either squeeze sellers or not, right? So obviously the overnight high is one of those levels, right? Anyone that's been going long over the weekend, the market opens, they're watching that level, right? They want the market to get above that level. Anyone that's been going short, expecting the gap to fill, they're going to change their minds above that level. So that is where you look for new buyers to step in or shorts to cover. One of the two. Now, if it was just shorts, if that's all it was just shorts getting squeezed, we would have seen this right here, and then boom, it would have gone lower. It's the fact that those shorts got squeezed and then the market didn't go lower that showed me new buyers were stepping in. It was also the candlesticks. So the candlesticks were white at first when we came up here, showing very thin volume, and then they got darker and darker and darker. That's new business happening at that level. So if shorts are going to get squeezed, if that's all it's going to be, it's going to happen at once. Right? Those stops are all going to get taken out, and then we come back down. The fact that those stops got taken out and then more liquidity kept stepping in, more volume, more volume, more volume, that has to be new buyers. Because why would you get squeezed here if you didn't get squeezed up here? You know what I mean? It's very nuanced, but you just, over time, when you're looking at the market through this lens, of is it buyers, is it sellers, is it new buyers, or is it shorts getting squeezed? When you look at the market through that lens every day, over and over, you just begin to recognize. It's just like your brain has a capacity for pattern recognition, and you just begin to recognize which is which. And when it's old business covering, it will happen very quickly and with very thin volume. When it's new business entering, it'll be a little slower and it'll bring in more volume. I talk about all of this, by the way, in much more detail in my workshop. I'm teaching a workshop. It starts next Monday. If you're interested, head to marketsandmind.com. And I go over all of this in depth there. I only teach a few of these a year, and it just so happens there's one coming up next week. marketsandmind.com. Okay, so I will be looking for some resistance right here around 87, just above this week reference, and for the market to pull back down to the overnight high. I would describe this as still being more short covering than new buying, just because the large volume dots are at the highs, right? So there's more people going long once the market pokes up rather than when it pulls back. And that's just more shorts getting squeezed and getting squeezed and getting squeezed. So if the buyers want to keep this momentum going, once they repair 85, they got to bring in new buyers up here once again, the same way they brought them in at the overnight high. So to my mind, we're likely to repair and then pull back. Let's see what happens. These volume dots can be a powerful resource if you know how to use them. On the Bookmap. On the Bookmap. I can't paste the link, actually. but I'll do my best. Yeah, it won't let you click it, but you could copy and paste it. Good morning, Pavel. Welcome. Okay, we're getting taper at the high here. So we got some tug of war happening. The buyers are trying to keep the momentum going. They need to pop through that high. Otherwise, they're going to have to pull back to the overnight high once again. It is always a matter of what level will bring in the buyers. If the momentum up will bring in more buyers, well, great. It'll keep going up. If not, it's got to pull back down, looking for those buyers at a lower price. So they need that pop right here, right now, to keep this momentum going. You can do it. Scooball says, Pirate, on the daily context, this looks like it might be a breakout of this mess to the upside. Yeah, again, I just say it's too early to make that call. So you're absolutely right. It might be, but there's so much weakness left behind. I was talking about that this morning. So, you know, is this a balance area in here? Yes, absolutely it is. Could we now be breaking out of that balance? Yes, absolutely we can. Could that lead to a large move to the... Oh, I'm on the NQ right now. I'm on the Q. There we go. Could that lead to momentum to the upside? Absolutely it can. But we could also pull back in and then shit right to the opposite end. So I would feel much more confident saying we're breaking out if we close higher today. Intraday today, it's tug of war, baby. Either side could win. So far, the buyers have control. But they haven't even been able to repair the first week reference. Okay, so as I said, this taper at the high is telling us we don't have the buyers yet. So we likely need to pull back down to 51.80, looking for support there. It is absolutely critical that they hold the support at 51.80. Because if they pull back through the opening price, they're looking for that gap fill. At that point, they squeeze all these FOMO buyers at the high. So the buyers really need to hold it. Oh, shit. Okay, there. Bust a Move says, if there's new buying at the highs around 51.84, aren't they FOMO buyers? Yes, they are. But we have momentum, right? So what does momentum mean? It means each time the market pushes up, it forces new sellers to cover, right? And it convinces new FOMO buyers to buy. As long as that keeps going, as long as it keeps going higher, forcing more shorts to cover, bringing in new FOMO buyers, and it goes higher, it can just keep going. And so that's what we're paying attention to. That's why I'm saying the overnight low is such an important level. As long as we keep getting FOMO buyers, price will keep going up. I mean, it will shock you how far they can push it. But the second the buying runs out, the second the last short has covered, the second the last laggard buyer has stepped in and there's no one left, right back down. And that's what the overnight high is going to do for us. Tell us if we still have buyers. I want to emphasize that I remain bullish here, particularly with how weak this high is. They're forcing the market to reverse at the exact same level again and again and again and again. And every time they do, they're creating liquidity above. Because these shorts at each one of these highs, guess where their stops are? Just right above. So the market knows if it can bring in some buyers here, it can poke right through. Ike says, I signed up for the Mastery of Markets in Mind workshop. Are you going to send out an email with instructions? You should have automatically received an email, just letting you know to wait until the day before the workshop starts. If you didn't get that, I suspect you have Gmail, and I suspect they put it in your promotions folder. So just check your spam and your promotions folder. It's probably in there. If you didn't get it, shoot me an email. Okay, that weak high has just become poor. So that increases the odds of a push away that comes back to repair it. So again, looking for support here at the overnight high to come back through. Danny says, what about those icebergs? What's your take on those? Right now, there's nothing really exciting to me about the icebergs. We've got icebergs going short and long at the exact same level. So that tells me that those intraday bots just want to grind up here. They want to chop around. If you made me guess why, what they're thinking, like I said, I think they want to keep creating these highs at the exact same level again and again and again, because that creates liquidity above. Each time they reverse at that exact level, there's stops. We can't see them because they're stops. They're not in the books yet, but there's stops building up here. And so when those buyers create that support, they can just crash right through. And I suspect that's what they're doing. But it's all a guess. I got to see that support at the overnight high to be sure. He says, I just got the PayPal receipt. Yeah, shoot me an email. I'll figure it out for you. Man, it always drives me crazy when I do these Bookmap streams. It feels like always on a Monday morning at exactly 10 a.m. is like a pivotal moment where you don't want to have to leave the live stream. Because it's like something's about to happen. And whatever happens, support at the overnight high, continuation higher, failure, pullback to fill the gap, will lead to whatever takes place the rest of the day. And it's like we just have to sit and wait. And this is the moment I have to stop streaming. Drives me nuts. Well, thank you guys so much. MYC says possible head and shoulders. You must be talking about on a very short time frame. I don't think about it that way, but yes, same technical idea. Thank you guys very much for watching. As I said, I've got a workshop coming up next Monday. If you're interested in learning how to read a chart, trade a market, manage your psychology, develop a setup. If you want to know what setups I trade, come on over. marketsandmind.com. If not, you can always join the Piratetraders Brigade. That's my community where I live stream all day, every day. The link is at the top of the screen there, piratetraders.io/join. And we'd love to see you come hang out. $10 a month. Speaking of which, members of the brigade, let's set sail. I'll see you guys in the private stream. Thank you very much, Bookmap community. See you Monday morning.